Hello and thanks for joining us today. We are here with Strix plc, who have just reported their half-year numbers to June 2019. Thank you for joining us, Mark.
Thank you.
You've a solid set of results where you've got market share maintained in, by the looks of the statement, in a challenging market environment.
Yeah, we've done very well, I think, in the first half of the year. Certainly in all of the three segments, we've managed to maintain or slightly grow our share in the case of China. So yeah, very positive.
The U9 series has been a success globally, but has obviously been allowed you to tackle the less regulated markets where I know you wanted to increase your market share. Has that been a success?
Yes, it has. I mean, the U9 series has been very successful. We've had very strong traction from the market so far. Since it started back into 2017, we've launched over 7 million controls. But as you say, working very well in the less regulated markets as well. And
the VQ series, is that something you're looking to introduce soon?
Already being introduced as we speak. It is intended to be targeted at that very low-end market, so we can compete head-on with some of those lower-cost competitors, particularly in the less regulated market.
And are you looking towards a particular ambition in terms of targets of growth that you're expecting to see from these products?
Overall, we're obviously looking to grow our overall market share. In the next 2 to 3 years, we'd like to get to sort of 41% globally, particularly in the less regulated market where we have the lowest share. Currently, we're around 20%. Certainly, I'd like to see that to get to the 35-40% over the next 2 to 3 years.
Fantastic. And how much are those actions where you try and mitigate copyright and do safety tests to help dissuade competitors?
We continue to do it. We're quite aggressive, as you know. During the course of this year, we've taken down 10 appliances from the internet. So that's been very successful, which are in breach of our IP. And we've actually had 3 products recalled that were being sold in Europe that were considered unsafe.
And again, converting those, the people that you have taken off the shelves, are you then converting them into Strix customers?
Always our intention, and that's a process that's ongoing.
Process ongoing, excellent. If we move then towards new product development, you've got a number of initiatives ongoing, an exciting growth area of the business. In the statement we've read about Mr. Coffee, which I believe is the new sort of single serve portion that's going out in the US. How's that going?
Only just about to launch, actually. So actually launches this month in the US. So it's a new collaboration for us. They're using Strix patented technology to make sure they can get exactly the right amount of water at the right temperature to produce that perfect cup of coffee. It doesn't need the use of pods or anything, so no issues in terms of recycling. So it's using sort of fresh ground coffee and gives you that instant, certainly within 1 minute at least, cup of coffee in the morning.
Fantastic. So imminent launch, and we can expect to hear about more of that in 6 months.
Very much so, very much so.
And then obviously Tommee Tippee has been a very big success here, and that's leading you into the Asian market as well. Looking at a new partner there?
We are looking at the baby care market overall. I mean, there's certainly lots of opportunities there for electrical products, and there hasn't been that much innovation in that particular segment. So certainly the Tommee Tippee product has been very successful, actually more than 1 million units sold of those products now since we actually launched it. And we're now, as you mentioned, also working with one of the leading Asian brands to bring some alternative products to the market, particularly obviously in Asia.
Excellent. All of these are obviously reasonably early stage, these opportunities, but very exciting and something which helps diversify the offering away from the kettle controls. As we look ahead, what can investors expect to see on the margin front?
It's a very important part for the business. So historically, when we actually listed in 2017, 90% of our revenues were kettle controls. We had stated previously, we sort of like to get that balance here nearer sort of 70-30, with the other section being a combination of water filtration and also these new product developments. The new product developments in particular are primarily for the regulated markets, although some do go into China, and therefore they are actually very high margin products for us. And actually also the components that we have inside those products are much more significant in terms of the value. So yeah, that will help to drive the bottom line as well.
Excellent. You nicely mentioned there the water category, which is obviously where we've seen lots of progress in the last 6 months. Halo Source being one, and Aqua Optima, which is well established. Aqua Optima had a challenging time in the UK, but light at the end of the tunnel?
Yeah, I think the first half of the year was difficult. Your consumer buying patterns certainly changed. The trade brands are actually doing very well, which actually will help us going forward because we have a very strong position in the UK trade brands. But overall, the market was slightly down. Moving into the second half of the year, we have some strong wins in Europe, particularly with trade brands. So we'll start to see those pull through. And also some very significant growth opportunities over in China, where we're launching a number of products with a couple of different partners in the China market during the second half of the year. So still optimistic about the second half of the year.
More to come.
Yes.
And for the Australia Halo Sauce, well, Halo Sauce company, Australia's the big brand that you have signed a deal with AquaShield, I believe.
That's correct. So the Australia bottle is actually a bottle that removes lead from drinking water. So it's a bit like your fridge jug, but it's on the go. Very positive responses in the US, although only just launched when we acquired the business. And we've now, as you said, had a very good collaboration with AquaShield, who actually introduced the product at the recent IFA show in Berlin as a Philips branded product. And that will likely go to the market in Q1 of next year.
Is that going to be a product just for the US?
Actually, for the Philips branded product, that's everywhere other than the US. So it'll be a global product for all markets.
Fantastic. And there was, I'm assuming, competition and interest from other players in the space. And what made you decide to go with AquaShield?
AquaShield have been very a good partner. They're obviously very positive. They move very fast. Obviously, the link to the Philips brand is very important. It's a very well-known brand, and we couldn't look for a better partner for that particular product outside of North America.
I also note you've appointed a new Chief Commercial Officer, Harry.
Correct.
Helps you carry the load and perhaps frees you up to look at other acquisitions?
It does a number of things. Certainly, it's freed me up, no question about that, which is very positive. I mean, Harry has a very strong background, more on the consumer and the brand side of the business. So he's very much looking at the commercialization of new products, trying to speed that up and put more emphasis on consumer needs and demands, which is obviously very good for the business as we bring out those new products. But for myself, it allows me a bit more time to sort of look at the strategy side, certainly look at some of the niche acquisitions that are available to the business for the long term.
Fantastic. Well, thank you, Mark.
Thank you very much. Thank you.
Thank you for joining us, Raudres. We've spoken with Mark already, and it sounds like it's been a solid start for the first half. Could you talk us through the key financial highlights as you see them?
Yes. Revenue has improved 2.5% in the first half, reported at 43.9 million. This is very solid despite of the economic and political headwind. On a constant currency basis, our results improved 1% first half over first half. As to absolute gross profit, we reported 2.5% improvement. Also, that's reflecting the solid top line growth. The gross profit maintained at 38%, same as last year level, despite of continuous labor cost increase pressure and our high-tech plastic cost increase over the year as well. We had a price increase in the year for the legacy products, and that helped to combat some of the increased pressure from the labor costs, and along with our increased operational efficiency, both have helped very well to offset the pressure. Adjusted EBITDA increased modestly by 0.7%, reported at 14.9 million for the 6 months, which is in line with our with the top line growth. What's included in the EBITDA was lower rental charges due to the IFRS 16 accounting. However, that was almost exactly offset by our newly acquired Halo Sauce operation, which have incurred losses as well for the 4 months, and therefore resulting in a bit of a flat adjusted EBITDA. Adjusted profit before taxes reported 4.6% increase at 11.5 million. Interest charges was lower due to the lower interest rate at a lower loan balance. There is minimal IFRS 16 accounting impact to our profit before tax, as the lower rental cost is almost offset by the higher right-of-use depreciation cost. Exceptional cost for the first half was 4 million. That's reflecting an increase of 1.7 million primarily due to the 900K of the Halo Source acquisition, as well as the share-based payment costs as well.
There's a couple of bits I'd like to pull out in that very helpful overview then, Raudres. Obviously, debt, as you say, there's been a movement down. What further progress can we expect over the next 6 months? So you've got various demands on cash. So what movement can we look forward to seeing?
And obviously, we continue to have increased capacity as a result of driving more automation. And therefore, the construction on the new factory will start in the second half, where we'll continue to have incremental capex on that. So altogether, we expect our net debt to EBITDA ratio to rise to roughly 1 times to 1.1 times multiple.
Okay, excellent. And the factory, how's it going? Are we still on track to see an opening in August 2021?
I'm pleased to say that our land and factory acquisition project continued to be tracking really well. The land purchase agreement was signed with the Chinese government in May, and then the construction contract was just signed in September this month. The new location is going to be in Zhengzheng, and it is within the same Guangdong province where our current site is located. It is around 22 kilometers away from our current location. So the budget target is 20 million, and we're tracking well on that. We plan to incur 7.5 million in the current year, and 12 million next year, and then a 500K capex in the final year of 2021. The whole entire piece of land that we got from the Chinese government is for 50 years lease, so that's very good for the long-term economic benefits of the company. And the project will take 2 years. Target construction completion date is January of 2021. We will start to move in quarter 2 and quarter 3 of the year, and then the ultimate completion is August 2021.
Excellent. Well, I look forward to another update in 6 months' time.
Yes.
Shall we move on to the dividend then? Obviously, you've delivering on your commitment to pay out 7.7 pence in 2019, a commitment you made back at the IPO. Where would we expect to see the dividend going from here? And obviously you mentioned additional distributions. Is this something that shareholders you think can look forward to, or is there a better use for cash?
The board proposed to pay 2.6p as our interim dividend, which is a 13% increase versus the prior year, interim dividend of 2.3p. We remain committed to pay a total dividend of 7.7p in the current year. As to what are we going to planning to do, of course, paying a special dividend is always in the options. But however, in weighting all the options, if we have better opportunities to enhance the shareholder value, we obviously will pick opportunities that could lead us to a better return, shareholder return.
There are a lot of things you could be doing with your money right now. Finally then, I would like just to ask about the average selling price, which was particularly strong in H1, but you did predict in the statement that you might see a fall in the second half. What are the factors behind this?
Yeah, we have a fairly strong results in the first half because of a price increase on the legacy products. So overall translate to a 3% increase. Mainly due to better product mix as geographical mix as well. Going into the second half, we are expecting higher growth in the less regulated market as well as the China market. So all of these will dilute the percentage of the ASP. However, it will still give us very good growth in profit terms for the full year, resulting to roughly about 2% decrease in the ASP. But our ultimate gain is to drive the absolute profit growth of the company.
An admirable game.
Yes.
Thank you very much, Raudres.
Thank you.